the Kudlow Report. I'm Larry Kudlow. At the top of the half hour, here's the big question we're going to ask. Would stocks have corrected lower without Egypt? The Dow lost 166 points today to close at 11,823. The Nasdaq really got slammed, down 68 points. The S&P off 23. Here now is Tommy Belesis, CEO of John Thomas Financial, CNBC contributor Don Luskin of Trend Macro, Evan Newmark, the Wall Street Journal's Mean Street columnist, and Jim LeCamp of TJM Institutional Services is still with us. Let me go to Tommy Belesis. You know, Tommy, we flirted with the promised land, 12,000 on the Dow, 1,300 on the S&P, but we could not get through, okay? GDP report today, yeah, 3.2%, maybe a little light for what the street was looking for. I don't know. We're still in a better recovery. And maybe more to the point, you had some nasty knocks. Amazon didn't meet. Microsoft didn't meet. Ford didn't meet. Monster Worldwide, none of them met expectations on profits. So I ask you, was all this Egyptian brouhaha, it may be darn important geopolitically, was it really an impact on the stock market, or to just give folks a chance to get through the expected correction?
Well, Larry, I got to tell you, it's great to be back on the show. You know, it's my opinion that this pullback is temporary. In any bull market, you're going to have, you know, a pullback, whether it's a crisis somewhere overseas or some type of shortfall in earnings. Now, if we were talking about shrinking profits, that would be one thing, Larry, but profits are growing. 72% of all the companies in the S&P 500 have reported better than expected earnings, and earnings season isn't even over yet. I think this is Egyptian specific. I do believe that the free market system is speaking out loud again. You cannot have the government controlling the people, and I think today it's evident that the people are speaking out. They want a free market society. Larry, like you said, free market society is the pathway to prosperity.
Don Luskin, we're back now with Tommy Belesis, CEO of John Thomas Financial, CNBC contributor Don Luskin of Trend Macro, Evan Newmark of the Wall Street Journal's Mean Street columnist, and Jim LeCamp of TJM Institutional Services, all with us. Tommy, let me go back to you. You've got an optimistic list, and by the way, I'm myself playing this as an optimist. Do you ignore, Don Luskin is telling us tonight, ignore the correction, ignore the threat of correction, ignore the potential correction, just stay with it. Okay, fair enough. Do you agree with Don?
I do, Larry. I think, you know, making money for your clients is not a bad thing. I mean, that's why people invest in the stock market. And if a catalyst like this in Egypt caused, you know, people to get a little concerned and take some chips off the table, then let it be. But I believe overall, people should focus on the long-term aspect of the improving economy and what's going on with the markets overall. I think it's an opportunity for people to buy great companies at cheaper levels, and that's all I think it is.
Evan Newmark, do you agree with that advice?
Yeah, I think so, largely. The problem is people are getting whipsawed here. If you wait till you see a correction, if you wait till you're down 20%, then what difference does it make if you haven't done anything yet? We've seen evidence of a correction for the last couple of weeks. We've seen a couple of high-volume reversals in the market. The market couldn't get through the 1,300 level on the S&P 500. A lot of the leading stocks are cracking. Some of the economic data has been disappointing. And yes, I do think ultimately we'll go higher. But if you ignore all these signs of a pending correction and just decide that you're going to ride through these, then investors are going to be left with another 2008. I don't know when it's going to happen, but pretty soon they're going to be down, instead of 20%, 38%, and then they have to make 50% to get back to even.
It's just pulling scare numbers out of the sky.
I disagree. Listen, we have the bullish case in favor. Historically, we're in the third year of the presidential cycle, which is historically a very bullish time. We have increasing earnings.
Not after 2 positive years leading into it.
And I believe 4 quarters of improving earnings is just going to cause us to blow through Dow 12,000, blow through S&P 1,300, and at the end of the day, you're going to be sitting there waiting, saying, I should have jumped in back on the dip. Well, you know what? This is a dip. You get in now, because I believe all this is going to surpass, and we're heading much higher.
Evan Newmark. Let's see. Tommy Belesis, I'm going to give you 20 seconds. Last word. Sure. What are you going to do Monday morning?
We are bullish. We're going to be buying very aggressively on these dips.
All right. And I'm looking for free market capitalism in Egypt. I may have to look very carefully. I may have to search very, very hard. But I believe there is a
it's all a pyramid scheme, Larry,
that moves us toward freedom. That is my view. Tommy Belesis, Don Luskin, Evan Newmark, and Jim LeCamp, you're all fabulous. After the break, folks, one of the Kudlow